Hello and welcome to The Pitch. I'm Sarah Allen and today I'm joined by Eric Fine from VanEck. Eric is going to discuss emerging markets fixed income with me. It's time to revisit this asset class for your portfolio. Eric, welcome.
Thanks, Sarah.
Traditionally, emerging markets fixed income has been viewed as the risky option. Why should investors revisit this view?
Because it hasn't worked for 20 years. For 20 years, our benchmark, which is local currency government bonds of EMs and dollar-denominated bonds of EMs, have massively outperformed the asset price in fixed income that everyone depends on, which let's call it the global ag. It's been our benchmark in the last 20 years during a period of great change after the global financial crisis, in which debt and interest rates were really prominent. We're up about 172%. The global ag's up about 50. So number one is a negative view on EM has been a disaster for the last 20 years. So, and I think the conclusion is the market has generally not looked at EM freshly, hasn't really looked at it for the last 20 years, and instead is thinking of EM as the EM of the 80s and 90s. The 80s and 90s were real, they were bad, but they learned and fixed themselves. So the main point is it hasn't worked to be avoiding EM for the last 20 years.
What trends are you seeing across the market?
Number one, reglobalization. The world is globalizing, there are new links, and they're very positive for EM. EMs in many ways are getting positive terms of trade shocks through lower costs with greater trading partners. That's the thing that the West benefited from for decades, globalization. So that's one big trend. Another big trend is continued fiscal and monetary high quality policy in the EMs. EM central banks consistently maintain high real interest rates. And for example, recently the Fed went higher for longer. EM, not a problem, will be higher for longer too. Not a problem because they have low debt. It's actually a problem for the DMs. The basic problem with high debt countries is you can't really have an independent central bank in a high debt country because the central bank obviously can't bankrupt the government. That's not a constraint in these EMs. So I'd say those are two big picture trends.
So your portfolio is weighted towards BBB and BB-rated bonds. Why are you finding more opportunities in these areas?
First, investment grade dollar-denominated bonds have very low spreads right now, and they are effectively a treasury proxy trade. I don't think I'm the world's leading expert in treasuries, and I don't think investors give me money to invest in EM based on my opinion on treasuries. So IG in dollars, not attractive. Below investment grade in dollars, corporates, we find some attractive names, but sovereigns are still very cheap. Spreads are very high, and these are the countries that are actually winning. Most of these are some Latin, but a lot of sub-Saharan African names with low ratings, a bad image, but great fundamentals based on our process. They're paying us a lot. They're benefiting from the news in the world. A lot of these countries, Nigeria, for example, has arguably the best politics in 30 years. Now, the standard's not great, but there have been dramatic improvements. So, so sub-Saharan Africa is one answer. Second, the other key point, especially for your listeners, Sarah, is that for local currency bonds, the rating is only on repayment risk. In other words, the rating agency only rates the country's ability to repay the bond in their own currency. Those ratings by definition are going to be higher. So the idea that low rating means low volatility for local is not always the case. You do need a process, and you do need to think about things on a country by country basis. But there too, the lower rateds pay you a lot more.
Which regions are you most bullish on?
Sub-Saharan Africa and Latin America. If I was going to keep it simple, Sub-Saharan Africa replacing Russia as the commodity supplier to Europe, and a lot of them have really positive policy developments. You could say Zambia, you could say Angola, you could definitely say Nigeria. There are a number of countries. Ivory Coast has been an anchor of stability in the region. So a lot of really good stories because of, I think, the unfounded image. They're cheap, right? So it's my job to take advantage of it. But that's one big area. The other area is Latin America. Commodities exporters and generally healthy political environments. I know Brazil can be dicey, or it can have the image of volatile politics, but one thing that characterizes most Latin countries and even a lot of the sub-Saharan African countries is voters themselves get it. You will not find, or it's very hard to find, for example, in Mexico, left-wing voters that will succumb to an argument that says, oh, let's use the central bank to generate economic outcomes. And the reason is they've tried it and it failed, and it blew up the banks, kills the poor, and kills governments. And so there's really deep understanding that spend how you want. You want to spend on social, reduce defense? Not my business, as long as you meet your budget and that's what a lot of them are doing.
What 3 key rules should investors keep in mind when investing in this space?
The alpha space is in the EM, not in the DM. So if you think you're going to do well in DM, good luck, I don't see it. That's number 1. Number 2, when you look at EM, don't look at it like a blob. It's not a blob, it's not homogeneous. Do it country by country. So that would be number 2. The third is, don't be afraid to think for yourself. If it makes sense, let it make sense. The biggest obstacle we have when we sit across from investors is not them. They all agree. The biggest challenge is explaining it to their end investors, to explaining to them, hey, these countries haven't generated problems in 20 years, they've generated much greater returns. And so we work with investors not to convince them, they're convinced. We help them convince their end investors that this is the right thing to do.
Thank you so much for sharing your insights today, Eric.
Thank you, Sarah.
If you've enjoyed this video, please subscribe to Livewire Markets. Thank you for watching.